The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome to the Option Block. I am your guest host for today, Mike Tusaw from Know Your Options, filling in for Mark Longo, who is on assignment. And today we have our usual cast of characters, as Mark would put it. First off, we'd like to welcome the greasy meatball sandwich himself, back from assignment on Monday, Mr. Mark Sebastian from the Option Pit. Mark, how are you today?
Oh, I'm doing great. Couldn't be doing better. The market's had itself a little bit of what I would call a dead cat bounce, and I've got an Irish bounce in my step, as it's St. Patrick's Day when we're recording this. Despite my lack of being Irish.
Gotcha. All right. And in our rotating chair from Options Express today, we have Mr. T-Nav himself, Tim Navabi. Tim, how are you?
I'm good, Mike. How are you?
Doing great.
That's good. I look forward to the show, and thank you very much for filling in for Mark while he's away.
I'll do my best. And then today...
Thank you for being so awesome, Tim Navabi.
Thank you very much, Mark. I really enjoyed that piece that you wrote yesterday on the streets about the volatility.
Oh, did you like that?
I did.
I can't believe you read it. Wow, I feel special.
The eyes of T-Nav are upon you. And then today we have a special guest. As Mr. Longo always likes to say, we like to drag people in kicking and screaming to see if we can get someone to actually talk on our show. We actually have Chris from Cycle Spreads. Chris, how are you today?
I'm doing great, Mike. Thanks a bunch for having me on.
What ethnic background is of Cycle Spreads? Just out of curiosity.
Ethnic background?
It's Irish today. Everybody's Irish today.
Cycle Spreads is one of the more unique last names I've ever heard.
Yeah, it's Wilson, so it could be Irish, Scottish, or English, any one of the above. So.
Oh, it's Wilson. See, because I thought your name was actually Chris of Cycle Spreads, which was, I thought
many people think it is.
It would have been a great name, considering you work for Cycle Spreads.
Yeah, would have been an amazing coincidence.
It's something else. Now what you're gonna hear a lot about, Chris. Don't talk about mini contracts in the metals. You're really gonna be. So, all right. With that, let's dive right into our trading block.
The Trading Block.
Guys, what I'm looking at today, what I think everyone's looking at, what the whole world's looking at, Japan. Mark, what are your thoughts on Japan right now?
I'm looking at today, and I'm wondering whether it was a bit of a kind of a dead cat bounce before we had a little lower. I saw, even though we actually held most of the gains from the day, I think at its top, the SPX was a little over $20. We didn't hold anywhere near volatility levels. I noticed that the VIX kind of gave away some of its kind of rebound today. The RVX, the VXX, all those indexes kind of gave back a lot of what they'd kind of lost at the beginning of the day. So the VIX went from down about $4 to down about $2.80 at the near day's end without the market moving, which means people started to get a little nervous and probably weren't really holding a lot of longs at the end of the day. So I think there's a lot of fear, as there should be. This thing gets bad enough. You can see the wrong side of 1,000 on the S&P 500. As it may, if it just gets as bad as people think, I think we could see the wrong side of 1,200. So, that's kind of what I'm looking at today. What about you, Mike?
Well, and I'm looking at this. One thing it seems like the S&P kind of has a magnet on the E-mini. It's like there's like a 1260 magnet. It seems. It went below 1260 for a little bit yesterday. It went back to 1260. It closed at 1260. 1260 was support in the big overnight scare a couple nights ago. So that's a number that I've been watching quite a bit on it. Chris from Cycle Spreads. That is a kind of a catchy last name.
It is. Yeah, I think a lot of people have been looking at that trend line on the S&P and trying to play either side of that trend line at 1260. But I think it's a tough call to make. I'm not sure if we're going to see an intermediate term correction here or not. And I think one of the things that's kind of contributing to the uncertainty is the bond market, Mike. If you look at the 30-year bond, it looks to me like we're pretty close to peaking. If not, we may have already peaked on the 30-year bond. And so arguments could be made either way what the result of higher rates could be in the short term, but of course in the long term they're probably not good for the economy as a whole. But in the short term you might be able to make arguments either way. So I think as long as we don't take out 1294 on the upside on the S&P, I think right now you have to maintain a bearish stance on stocks.
Yeah, I mean, like Mark said, rightfully so. There's a lot of fear in the air out there. Mr. Tina, over at Options Express, there are a lot of people calling in and asking about what's going on in Japan, and what are some of the calls that you've been getting today in relation to Japan?
I would say it seems to be mostly people being defensive. It doesn't seem that too many people are putting bets one way or the other. I completely agree with Chris. I mean, I almost dead on. I was going to say, something very similar. So, yeah, I think you have people around that sort of trendline area. There's people who are scared, who are looking for the market to go down. And exactly like Mark said, I mean, if things get ugly, the market could get very ugly. But at the same time, you still have some people saying, well, okay, so far there's nothing very seriously damaging on the charts. So, I think people are just kind of hanging out at this level. So I think some of the people that I talk to are really sort of trying to be defensive.
Okay, that's interesting. Now, the other thing I was just noticing today, commodities and oil and natural gas. Oil's up about 3.5% on the day, and natural gas, last I looked, was up close to 5%. Have there been a lot of calls and inquiries in the commodity space today at Options Express, and what are some things that maybe you're seeing right now?
To commodities, people are sort of selling some calls. Those are some of the orders that I've placed. Whether it's because they, are long the underlying or they're long another option down below. Same thing here. No one is really certain about what direction either one of these markets are going, which direction they're headed. You have two camps, and they're both feeling pretty strong at the moment. So, on a move like this today, not too many people are jumping in to get long. Some people are selling some calls. Some people are liquidating some of their positions. So that's that's kind of what I'm seeing here.
Yeah, Tim, what do you think about this? Like, I would argue that, now's not the time to be buying spiders and buying big portfolio things, but maybe picking some good stocks that maybe are kind of being brought down with some stocks that maybe deserve to get brought down with kind of what's happened over there. Any thoughts on that?
Yeah, I agree with you. And again, I sound like a broken record here. It just, seems that, now is not the time to sort of get into anything speculative. I'm not seeing too many people, buying things that are speculative at all. The Priceline calls, the Netflix calls, phone calls I'm talking about, non-existent at the moment. The Google calls, the Apple calls, those phone calls I haven't taken in a while. I have spoken to a customer who I always enjoy talking to, and he's always long a debit spread. And so today he was actually going long some put spreads in some of those. So for the most part, people speculating on some of those, high flyers, they're just sort of they're not ready to play at the moment.
Yeah. Well,
Mike, I'll be.
Oh, go ahead.
I'll be the dissenting voice on commodities, just because I see one in particular that seems like it's a good risk-reward type of play, and that is natural gas. Because the move today was on a lot of our indicators was a buy, and I also see over a longer-term time cycle, it's possible we're putting in an inverse head and shoulders on natural gas. So I definitely see the potential for natural gas, especially with fundamentally what's going on in Japan. I see the potential for a big move up in natural gas, and then the downside is very minimal. So I really like natural gas right here, and you could, in my opinion, play it with an ETF like SCG or something like that.
Yeah, that's kind of what we're looking at right now too. I guess I'll be the other dissenting voice, so to speak, but for kind of different reasons, I guess. What we're really finding right now, we've been doing, and I've been on record on this show talking about this for the last few weeks. We've been doing a lot of combos with natural gas stocks, in that we're selling near-term premium, March and April premium, short puts out of the money, and we've been buying June and July calls or call spreads with what we've been able to finance with that. And it just, like a day like today, works out perfect for us. And this is a technical term for it, folks, so be prepared. Luck. This works out well for us, in that a lot of the puts that we had for March are going to be expiring worthless now. So we have a lot of nice positions for the next few months where the downside that normally would have the premium risk has been financed by the short puts that we've been selling. I'm with you with natural gas, and that today was a huge day for it. It was up 5%. It's over the $4 mark, which is that's kind of been I guess I'm viewing that as kind of like another magnet number on natural gas, kind of like I was looking as a more shorter term, the 1260 for the SPX, or I'm sorry, for the E-mini. I prefer natural gas stocks right now, but I can see where you're coming from. I'm on natural gas for sure. You guys doing anything in the option pit on natural gas, Mark?
It's something we've been messing around with. But we've been kind of more looking at, our guys like to stick a little bit more toward they're a little shorter term, so they're more in oil and S&P 500. By the way, you guys all have, Chris, do you have kids by chance, Chris? Every time I listen to somebody say, well, we got a head and shoulders forming, I always want to end it with the knees and toes. I can't stop it.
Well, patterns, all patterns are just that. They're not. Some are higher probabilities than others, but what we try to do is look. We don't offer ETFs. We're trading futures and options, but I'm looking at this for my own portfolio and saying I have a fundamental story. I have a short-term indicator that is showing me buy, and I have a longer-term chart that's showing me a bullish outcome potentially, with a minimal downside, probably in natural gas of maybe around 385. So I like this story. I think it's a minimal risk kind of play, and those are the kind I like for my own portfolio.
Well, and natural gas could rise for a lot of people out there. I was listening to a comment from the CEO of Exelon. He basically was out there saying, "Would anyone build anything other than a natural gas plant right now? Because it's so ridiculously economically advantageous to all the other forms of heating that everybody is going to be moving that direction, whether we have Clean Air Acts or not." And a lot of this clean coal stuff seems to be just the coal industry forcing stuff through, as opposed to maybe what makes the most sense. Just kind of something I thought was really interesting. So I think natural gas as a long term is a great product.
Yeah, and just over the intermediate term, and if the bullish outcome from the charts is to be had, you could see a nice 2-point gain in natural gas. You could see it get up to 6. So something to keep in mind.
Most definitely. Sebastian, what are you guys doing over? I hear that a little bird telling me that you have some things to say on EWJ and Toyota.
Oh, a lot of people probably don't know EWJ that well, at least until probably last week. EWJ is the Japanese ETF, and it's an interesting stock, and I think it's been, because it's so inexpensive, it's only $10. It's a really interesting way to get in and out of the Japanese market. For those that want to day trade or want to get into speculative positions that don't want to get in Nikkei futures, this is a really excellent product to get at the entire Japanese market. In a relatively inexpensive way. The vols are really interesting. The one, for those that are kind of looking at kind of fundamental plays, Toyota at $80, I think is, with the way they dominate the market, even with any kind of production problems, I don't see how, if Toyota could basically have all of these recalls over the last year and increase their market share, I don't see how a few small production problems are going to get in the way. I really like them as a manufacturing firm, not just as a car company, and to be able to get in on them at below $80 to me seems like a steal.
So you're saying that the stock can accelerate then?
And the options have been.
Sorry.
That's hilarious. And well, the problem is that I think that the stock is going to not stop accelerating. And some of the options have been really cheap. One thing, though, because of the order flow that's been moving one way or another in Toyota, there has been a couple of opportunities where different options have become very mispriced, even an upswing and downswing of vol that you can take advantage of. So I think Toyota, for an option day trader, looked like a really, really interesting stock to trade. I don't know if you guys looked at either of those. EWJ is probably breaking volume records. I actually used to make markets in that. I did like 2 contracts a day. Now it looks like there's some real major action.
Folks been calling you about EWJ at all, Tinav?
EWJ, no. In fact, I haven't had too much activity on anything Japan-wise. It seems, like I said before, that people sort of are making trades in their portfolios pretty much based on information that they're getting from there, but they're not making any direct plays.
Yeah, that's interesting. Well, apparently the people are looking to be more defensive, as you had said. So that'll be good stuff. All right. Well, that will conclude the trading block for today. And now we will get into the interview block.
The interview block.
And welcome to the interview block. This is where we drag someone in, kicking and screaming. And today we have Chris from Cycle Spreads Wilson. How you doing today, Chris?
Good, Mike. Thanks for having me.
Oh, thanks for being with us. Chris, tell us a little bit about what you do at Cycle Spreads and a little about what Cycle Spreads is.
Yeah, Cycle Spreads basically is a means of auto trading far out of the money bear call spreads or bull put spreads. We've been doing it since 2007. I myself have been doing it since 2003. And generally we do them over the S&P 500 or the Russell, sometimes the S&P 100, but generally the majors. And it's worked out pretty well. Our performance has been almost dead on 35% a year since we opened the doors. And, it's really a fairly conservative way of taking risk in the market. And we've been pretty happy doing it. We've got a couple hundred members who are doing it along with us, and they're happy as well. So.
Well, that's a good thing. That's a good thing. Now, from my understanding, typically what you guys do are out-of-the-money credit spreads. Now, that trade itself is fairly simple, but obviously the means with which you determine where to put it, when to put it on, that type of thing are probably a little bit more complex. Can you tell us a little bit about your methods and what's in the secret sauce?
Well, I'll give you as much as I can.
Okay.
I think it is different than the methodology that I would use perhaps in our future service or if I were doing swing trading for myself. Because really what Cycle Spreads is about managing risk. And so what we're trying to do is project price, both to the upside and to the downside, depending on where the market is trading. So I guess really my background is I use Elliott Wave as kind of a descriptor for where the market is. I don't use it as a trading vehicle, but I use it as a descriptive tool to tell me what the state of the market is. And then I use, just some conventional means of measuring trend, just like everyone else. I use some moving averages to measure trend. And then we've also got some of our own proprietary indicators that we use to get us into the trades or potentially get us out of the trades. So most of the idea behind doing this type of spread trade is that we manage the risk should we come close to our exit. And we are trading these spreads European style. So we're waiting basically for these trades to expire, both legs of the credit spread to expire. And, if we're doing our job properly and we're managing the risk properly, they can work out successfully. If we get close to our exit, then we have to make decisions about potentially exiting the trade early. And thankfully, we've only had to do that a couple times since we began, and those losses were pretty small. So.
Well, that's good. Now, just to kind of give our viewers a little bit of an idea on the credit spread, you guys never typically don't do condors. You pick either a bull put spread pretty far out of the money or a bear call spread pretty far out of the money. Is that correct?
Yeah, that is correct. We do have members who use our trades as the basis for trading condors, and they're, of course, more than welcome to do that. We don't do it. I personally am not a big fan of condors, but there are definitely times during different cycles where condors have a very high probability of working. So it's just something we haven't had to do and probably won't do because we've got other irons in the fire, and those are working out pretty well too. So.
Gotcha. Now, in terms of managing risk, let's expand on that a little bit. When selling a far out of the money credit spread, that's going to work most of the time. And what obviously separates the men from the boys with that trading business or with that trading strategy is how you manage risk when you actually get the quote-unquote black swan event or the who could have possibly predicted that could have happened event. Let's say that you're in a bear call spread, let's say, and you start getting that uncomfortable feeling in your stomach as the market's rising, and you have to do something to manage risk. What are some of your parameters as to when you would get out of the trade, when you'd stay in it, or tell us a little bit about that.
Yeah, well, first thing I'll say, it is fairly rare to have a black swan event to the upside. So, and that's why we favor bear call spreads so much. It's nearly impossible to predict a black swan, but the market almost always moves down more quickly than it moves up. So, and volatility plays into this too also, because if you're sitting in a bull put spread and the market is declining rapidly, volatility is escalating as well, and you see major distortions in spread price, and usually not in your favor. So, whereas if you're doing a bear call spread, the probabilities of your exit getting hit are what they are, but when you're trying to get out of that type of trade, it's a bit more manageable because volatility in that environment is typically lower. So that's why we tend to favor bear call spreads. But yeah, I mean, it is. You do separate the men from the boys. A lot of people panic in those kind of situations. You just can't panic. You've got to look at resistance areas or support areas if you're looking at a bull put spread, and try to measure the probabilities of hitting those areas. So
do you have a number? Like, let's say that you're doing something on the SPX, and then let's just say theoretically 1400 was your short call. How close would you typically let it get, or would you kind of look at what you had just indicated, or do you have like a set number that you use, or? No,
there's no set number, and it's not a science we have. We have some people who, they do want to know what that secret sauce is, and I wish it was as simple as having a secret sauce. It's not. It's really a strategy and a methodology based on experience and knowing when you're in a high volatility environment and a low volatility environment, and that has a lot to do with how far out is enough. And and we look at the market as a whole. We don't sit there and just look at the S&P or the Russell and say, we're going to get hit. We do look at the bond market because we do trade the bond market, and we look at commodities, but we try to measure probabilities based on what's happening throughout the market. It's not just the index that we're trading in the spread.
Gotcha. Now, you mentioned bonds. I understand you have a new product out on the 10-year note. Can you tell us a little bit about that?
Yeah, it's been trading about 6 or 7 months since we began, and it's doing incredibly well, I think. We've got 3 different automated strategies that we built, and basically we let these strategies get us into the trades. We try to let the strategies do what they do. We do have our own kind of cyclical view of what's happening in bonds, and typically if the strategy isn't kind of going in the direction of our cyclical view, we might manage the stops ourselves a little more tightly. But we're doing really well. We've got one strategy that's doubled since it began just 6 months ago. So, and the other 2 are profitable. So we're pretty pleased with that. It's definitely different than cycle spreads where it's like watching paint dry, the trading for cycle spreads. But, cycle futures is still a swing trading strategy, but it's more volatile, of course, than a spread trade.
Gotcha. Now, what are some of your thoughts right now on treasuries? Do you have an outlook on them, or?
Oh yeah, for sure. I mean, I'm sitting here looking at the 30-year bond, and to me, I feel like we put in a major low not that long ago, and we've been basically correcting upwards off of that low. And if anything, I would say that there's a chance that we may have topped right around 124 on the 30-year bond. That was also a 50% retracement area on the 30-year bond. So my guess is that we're in for a really, really rough ride to the downside in bonds, and that extends to the 10-year note as well. So, we may not be quite over with this move to the upside in bonds, but I think there's a good chance that we've hit our target, and we're about ready to roll over in a kind of a vicious way to the downside.
Yeah, it's tough to justify buying a bond right now for the interest rates that they're paying.
If somebody wanted to take that opinion, would you suggest that bonds are going to fall and they can't go to the exchange and sell treasuries, would you say go out and do TBF or TBT, or would you look? Yeah, you think that's a buy right here? Is basically.
Yeah, absolutely. Yes, I think you can get into that with minimal. Again, it's the type of thing that I was just talking about on natural gas. The upside is somewhat, the upside of the trade is great, but the risk of the treasuries moving back up probably aren't that great. And I would say in that type of trade, if the treasuries rally past a 62% retracement, then I might start to rethink that. But as long as we remain at or near or below this 50% retracement area, I think shorting treasuries is a great way to go. And I think it's a great reason for somebody to be in our services as well, because, you can make a tremendous amount of money shorting treasuries probably over the next couple of years.
All right. Well, Chris, just in regard to your services, I understand that you have a webinar coming up that talks about your services. Can you tell our listeners a little bit more about where they can go to find more information on that? Maybe give us a little sneak preview about what you're going to be talking about?
Yeah, out on our main website, just go to cyclespreads.com. We'll have a link posted there for the webinar. We're just going to have a kind of a broad overview of what cycle spreads and cycle futures are about, and talk to them about risk and reward, which is what we're all about. And I think it'll be interesting and worth your time.
All right. Well, thank you for coming on, Chris. It's always a pleasure to have you. We hope that you come back sometime.
Yep, be more than willing to. Thank you, guys. I really appreciate it.
Thank you, sir. And that will do it for our interview block. And now we will dive into the Express block.
The Odd Block.
And welcome to the Odd Block. This is the segment of our show where we discuss unusual activity in the option market to where it just kind of makes you raise an eyebrow a little bit. First one that I have on our docket for today is ticker symbol VSI. VSI is a vitamin shop, and their average daily option volume is 28. And if you go out to the month of May, you'll see a 5,000 lot collar being traded. On this is one where I'm looking at it, and earnings are coming up on April 20th. So what it looks like to me is that someone might be just looking to protect their stock position. The stock right now is trading at $32.40, and we had someone going into the 30 puts and the 35 calls for the month of May. From the peanut gallery, any thoughts on this trade?
I'm not super familiar with the vitamin shop. I mean, what are your thoughts? You ever looked at the fundamentals of this sucker?
Well, what I'm seeing on it, I think the main thing of what I'm seeing for the vitamin shop is that what we have, there's an earnings announcement coming up on April 20th. So what this could be is someone just looking to protect a long position, perhaps, because this is a whole lot of size for something that typically trades only 28 contracts a day on the entire option lot.
Wow, that's so
pretty big.
It could be. It sounds like a kind of trade by appointment type stock. So I don't. That's crazy. So
wow.
It could be one guy protecting a big position. Would be my bet.
Someone got a whole lot of creatine in this, apparently.
Exactly.
How about over at the option pit? Do you guys have anything unusual going on over there?
I noticed two trades today. One is in Red Hat. Red Hat, as you all know, is an open source software provider. They do a bunch of enterprise software, a bunch of different stuff like that. And they've got earnings coming up next week on the 23rd after the bell. We saw a trader come in by the April. Red Hat trading $39. All right. We saw somebody come in by the April 44.45 call spread for 20 cents. Obviously a bullish play. Guy making a cheap bet that he thinks this thing is going to rally. And, a lot of people think, well, he thinks this thing is going to rally all the way to 45. No, not necessarily. Red Hat could only need to move next week, which is early enough in the cycle, up to, let's say, $42, $43. And what you'll see is those 45 kind of maybe melt away, and the 44s maybe retain, 40 cents. The guy could basically double his money, which is what I'm guessing he's kind of going after. Trying to turn 20 cents in 13,000 times into 40 cents 13,000 times, which is done 13,000 times, a lot of money.
Okay, and that brings up a thought that I've done webinars on this before. When doing a short-term trade, is it better to always do short-term options, or should you do a longer-term option for a shorter-term time frame? And apparently in this case, the guy that did this trade thinks that the option strategy matches up better in this situation, to where buying something longer-term will benefit him in a greater trade for the short term.
Yeah.
I hate to play the pattern card again, but looking at I know you're going to hate me in the morning, but just looking at this, it looks like you could make an argument.
That's what I told my wife when we first started dating.
Well, you could make the argument that it's breaking in the neckliner, so you might not be too happy with that trade if if that happens, continue going down in here. So we'll see. I don't think I would have done that. I wouldn't do a bullish trade technically on Red Hat right here. It doesn't look particularly healthy to me. But
Gotcha. What else are we looking at over in the pit?
The other one I was looking at was it's actually named after my favorite show, Valerie Ions Protection Agency, starring Pamela Anderson. VIP, okay? And for those and there's another joke there, but you have to live in Chicago to get it. It's Vimple Communications. Now, you're saying, what the heck is Vimple Communications? Well, believe it or not, they actually had earnings this morning, and after the bell, and the stock did, move 28 cents. Apparently, since the utility earnings don't really matter, it's more the dividend. Vimple Communications, a trader came in and sold the September 12.5 puts on the Amex 10,000 times at 75 cents. Apparently, this is kind of I'd be happy to buy this for the equivalent of $11.75. But really, I don't think this thing is going to rally hard. I don't think it's going to fall hard. I just want to collect my cash. Kind of happened near the end of the day, and apparently some VIP thinks that this put sale is going to be a VPT, a very profitable trade. So that was the other trade I was looking at.
Yeah, that's one where the short put, it's like, I think you even coined the phrase, Mark, sell the dream and live the dream. This would be one to where
that was coined by many a trader long, long ago.
The market didn't exist before you. Come on.
That's like saying I coined the term use the force. So,
are you telling me you didn't coin that one either? All your
or like I made up that duct tape joke, or I invented all of mommy jokes. So, none of which is true.
Oh, I'm so disappointed to hear all these things today. I don't know how. I sold all my Preem, and I have no more dreams now because of that. And with that, the 75 cents, this is one where it does definitely look like what you had said. It doesn't look like it's one to where someone's looking to do a lot of credit spreads way too close to the money than what they're able to handle. But, yeah, from what I could tell, that's definitely what appears to be from what I'm seeing. And now we will dive into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
For the most part, all of the commodities were very strong today. Some of the grains, they were stronger on some news, some reports that came out which were more bullish than expected. Don't have that report right up here in front of me, but that was a report basically that caused some of the bullishness there. In addition to some of the news that I'm reading here, basically is saying that things are looking a little bit better than worse in Japan. So that gave a lift to most markets. Thinking that things, really aren't going down the toilet as bad, and no one's going to need anything because there's nothing going to be around or no money just to buy. So we did talk about natural gas, and it seems like we have a consensus here that it's a nice strong play right now. The risk to the downside is not as great. To the reward to the upside. So that's one of the stronger, more sort of enticing commodities if somebody wants to get involved in. Our commodity analyst, Rob Kay, he had a recommendation today on his Espresso blog about buying cocoa. He was essentially looking to get in. He saw it, oversold. He thought there could be, some value buying here, some short covering, and basically he had a recommendation to go long. And so I'm trying to get these numbers up here in front of me, and I'm just struggling a little bit. Let me give you his points here. He is on our website with his blog. It's the Espresso blog. You can find that on the research in the research center. He essentially was looking to go along somewhere in the neighborhood of the 31 area. 3105 is the number that he had chosen earlier this morning. Stop at 29.90 with the upside target of about 32.75. So, there's the trade recommendation. He's, can give you a little bit more fundamental and technical information on why he's making that trade. But Rob's bullish on cocoa. We're bullish on natural gas, seems like. And just another big day in commodities. So we're probably going to have two very big volatile days here in front of us. So, hang on, I would say,
Like that poster of the cat hanging there, baby, huh?
Right, exactly. If you're a long-term commodity bull, maybe start to pick some entry points, put in some limit orders, and maybe get some opportunity to buy this over the next 2 days here with some of the volatility that may show up.
Sounds good. All right, well, that will conclude today's Express/Thread block, and now let's conclude with Around the Block.
Around the Block.
And welcome to Around the Block. This is where we talk about what are we watching and what are we looking at in the next coming days or weeks. Tim from Options Express, what are some things that you guys are looking at in the world of Options Express?
What we're looking at as far as Options Express goes, we do have a couple of events. You can find the events at the Options Express website on the Educate tab. We have a couple webinars. We do have a couple live events. And it looks like as far as some webinars coming up here, we have on the 20th, we have Neutralizing Gamma. That's at 9:30 Eastern. On the 21st of March, we have Hedging a Stock. That's also at 9:30. And then on March 22nd, 1:30 Eastern, we have Trading Calendar Spreads. And that's with a presentation from the ICE. So that's what we have going on here. As far as what's going on news-wise, so no news tomorrow. What do you know? Okay, yeah. So,
I guess they figure everyone's going to be with St. Patrick's Day tonight. They don't want to have too much news tomorrow.
Yeah, that's exactly right. So,
well, thank you, Tim. Chris from Cycle Spreads. What are you guys looking for in the coming days? Technically, fundamentally, news-wise, what are you guys looking at?
Well, technically, to us, there is no clearer chart right now than the 30-year bond chart, and we're just looking to see if we put in a top here or not, and if we have, we think we're going to see pretty violent moves in the days and weeks to come. I know a lot of people, a lot of analysts come on the news shows and kind of hype up the fact that we've got such bullish fundamentals in stocks, but I still say this is a big liquidity machine right now, and you saw it yesterday. When the press reported that the Fed was going to delay POMO or that it was postponing POMO, you saw the market fell off 100 points in practically no time. And then, they come out and say, well, it's just delayed, which was, of course, probably really what was happening. But the fact is that these markets, I still believe, are completely dependent on the Fed here. And, I think that's reflective of what's probably going to happen in bonds pretty soon. So, in my opinion, the Fed probably doesn't have much of a choice but to continue eating, whether it's called something or not doesn't really matter. All that really matters is that's probably their only choice going forward.
Sounds good. At the Option Pit, what is on the docket, and what are you guys watching?
We're just keeping an eye on this Japan stuff. There's been some of these pops of volatility have been really excellent opportunities to sell volatility. I think that we've had some opportunities to play in some of the Japanese stocks. Believe it or not, volatility pops can actually be a great time to get in and out of time spreads. It's something a lot of people don't know. We had our free calendar course last Wednesday. We had huge attendance, and I was really pleased. So we're going to be doing it again, obviously, the Wednesday before Expiration Friday, which is going to be April 20th, and that's going to be a great time. And aside from that, don't forget we are running our retweeting contest. If you go to my blog, which is optionpit.com/blog, and you retweet a blog, you're automatically entered to win a subscription to TheStreet.com's Option Profits team, something I write for, and which is worth $1,000. So all you have to do is click retweet. You don't even have to have followers. That's not such a terrible contest. So, of course, we just started our annual NCAA pool. So we had a record number of entrants. So we're excited about that as well. So.
Well, I have to say I could write a book on what I don't know about college basketball, but last year I did the dartboard challenge, and I picked Duke, and the dartboard worked for me last year. I actually won the pool, so that was an exciting thing. All right. Well, I'd like to thank everyone for coming on the show today. Chris from Cycle Spreads, if you guys would like to learn more information about what his company is all about and his upcoming webinar, make sure you go to cyclespreads.com. For Mark Sebastian of the Option Pit, if you'd like to learn a little bit more about what's going on in the Option Pit world, go to optionpit.com. And with Tim Navabi from Options Express, feel free to go to optionsexpress.com and learn a little bit more about what's going on over at OX. I am your host, Mike Tusa from KnowYourOptionsInc.com. Feel free to visit our site. We'd love to give you a free 18-minute portfolio review. Thank you, everyone, for coming, and let's have a successful trading week. Till next week. So long, everybody.
The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.